Good evening, ladies and gentlemen. Here, Marty Erico, CrudeSquawk.com, giving you guys the API numbers that came out this evening here in the crude, RBOB, and heating oil. Alrighty, ladies and gentlemen, let's just talk about our energy complex in a whole. First of all, first and foremost, we did see our API, American Petroleum Institution numbers come out this evening here. We did see a draw of 4.1 million barrels here in the crude oil. We also did see the crushing Oklahoma plant come out with a little bit of a build in inventories, 118 barrels. But most importantly, we saw that solid number come out generally for the week-over-week number, negative 4.1 million barrels. So that's a big draw there. Gasoline, we saw actually a build in gasoline inventories week-over-week of 4.2 million barrels. And our distillate here, heating oil, diesel fuel, week over week we did see a negative draw of 1.9 million barrels. So kind of mixed here across the board. Again, seeing draws in crude and in distillate, but seeing a build in gasoline. So real quickly, I just want to talk about our forecast for tomorrow's big number here coming out, DOE EIA numbers that come out at 10:30 tomorrow morning. We do want to look at those forecasts, what analysts are expecting here. They're expecting for the crude here quite a large range. I see analysts forecasting a negative 1 million draw, and I see the lowest expectation of negative 2.3 million barrel draw in crude oil. So a little bit of a wide range there. We can call it anywhere between negative 1 million and negative 2.3 million. If our APIs are going to be any type of indication, it looks like there's going to be a greater draw. So we're going to have to keep our eyes out for that. In gasoline, we're looking for a build of 2 million barrels. That's going to be our expectation. Our forecast that analysts are expecting here, about 2 million barrel build in gasoline. And in our heating oil, we're looking at a build of 1.5 million barrels for the distillate and heating oil diesel fuel. So again, a little bit of a wide range here across the board. But let's just recap today's trade here. Excuse me. For December 18th. Taking a quick look here at our crude. Had a high of 88.63. Had a low of 87.68. We did close and settle them out at 88.35. So again, we had about a $95 range. This trading session, and we did see a little bit of a bid come into the crude oil. In the pit today, biggest orders that we did see were in the Feb 88 to 90 call spread here. We saw it trade about 600 times in the pit. Also, what we did see was that was actually for the weekly options. We saw in the weekly options the Feb 88 to 90 call spread traded about 600 times that we just mentioned. In the outright monthly options for Feb, we saw a little bit of short-term trading here. 800 contracts of the Feb 90 puts traded today as well. So again, just giving us some indication that we could get up to the $90 level here in towards the end of the week and then turn around for next week. So that was basically what we saw today. We just saw a little bit of a bid come into the market. Any indication on the numbers that just came out, we could see it rise up to $90 a barrel and then kind of pull back there, suggesting the 800 Feb puts that were bought today. So let's take a quick look at our other markets here. Let's take a quick look at what we got here for our RBOB and heating oil. Again, RBOB today we saw a decent looking range here today. Again, RBOB on our right side of our chart here, we traded $2.7068 on the high end of our trade, and on the low end of the pit session we saw $2.6744. Again, egaling a decent range here to the upside, but again towards the end of the day just kind of a lot of long covering here. Again, what we did see in our API numbers was a build of 4.2 million barrels, so we could see maybe just a little bit of some suggested selling come in tomorrow morning, but again, probably that crude heating oil correlation could just make this market chop around for the most part. Alrighty, now to move over to our heating oil. Heating oil, we had a decent range as well today. We're talking about $3.65 on the high end. That's $3 spot 65. And our low end of our trade was $2.9729. Again, that's $2.9729 on the low end of our trade here today. And in our API numbers, we did see a negative draw of 1.9 million barrels. So again, it looks like that they are coming up short this week here in some heating oil. So again, fundamentals would suggest we would get a little bit of a bid in the market. So we're going to definitely have to keep our eyes posted on what comes out tomorrow at 10:30. Alrighty, now just finishing off here with our natural gas here. Natural gas. Trading within a little bit of a range today. We're talking 34.50 on the high end of our trade and 33.72 on the low end. We did close and settle them right near open price and just a little bit of off open price right in the middle of the range. 34.15 is where we closed and settled them today. Again, natural gas, we did see actually some weather patterns starting to support this market to actually just sell off just a bit here, as we did see the last couple days, but now more recent weather patterns seems like they're going to be actually creating somewhat of a bullish-like scenario here in the natural gas. So we did see them sell the $3.45 area pretty heavily today, as you can see on the chart. We did go lower, but again, ends up retracing back just a bit halfway from the rally from today. Sell-off from today, sorry. So what we're going to have to really look for in the natural gas is if these weather patterns do create a bullish-like scenario in the markets and probably get somewhat like of a 10-cent rally, maybe we can call it. Just from looking out into the strips, that looks like that they were buying some of the strips here in the natural gas to make it go a little bit higher. So we're going to have to look into that strip buying a little bit more tomorrow morning and ahead of its big inventory on Thursday. So again, ladies and gentlemen, that's it from the Energy Pits here in New York. Marty Errico, CrudeSquawk.com.